If you are an expat, if you are an expat working a great job here in Germany, you already know the pain of seeing nearly half your paycheck vanish into taxes. But if you are regularly transferring money back home to support your family, the German government has a massive legal tax loop built just for you. You can deduct these family support payments directly from your German taxable income. But there is a huge timing trap that catches almost everyone. If you make your very first transfer of the year in January, you lock in the maximum possible tax refund. If you wait until later in the year, the Finanzamt slashes your allowance month by month. Today on Arch Time, we are looking at the math through the eyes of a high earner in the 42% top tax bracket. We'll explain the strict January rule, why sibling accounts are a total dead end, and how adding your grandparents to the claim can skyrocket your tax refund. Let's break it down simply. The German tax office operates on a strict monthly timeline under Section 33A of the income tax law. They assume the money you send only covers your family's living costs from the exact month you start transferring until December. For the tax year, the absolute maximum basic allowance you can claim is a massive 12,348 euros per person. But if you delay your very first transfer, you lose 1/12 of that amount for every single month you wait. 100% full allowance. First transfer in January. You anchor the claim to the full 12 months. Your maximum allowance stays at the full 12,348 euros per person. 50% allowance slashed. First transfer in June. You delayed by 5 months. The Finanzamt cuts your allowance in half, leaving you with a maximum cap of only 7,203 euros. 1/12 allowance only. First transfer in December. If you send a huge lump sum only at the end of the year, you can only claim a tiny maximum of 1,029 euros. The golden rule for your strategy? Start in January. Even if you send a tiny amount in January just to activate the clock, you can send your main, larger transfers later in the year and still keep the full 12-month window open. Before we do the math, let's talk about a rule that can instantly ruin your tax return. Whose bank account are you sending the money to? In many families, it is completely normal to send money to a sibling, a brother or a sister, who handles the local family house. Do not do this if you want a German tax refund. The law is clear. The money must land directly in the personal bank account of the dependent you are claiming. To your mother, father, grandmother, or grandfather's account. Check 100% valid. To your brother, sister, aunt, or uncle's account. Completely rejected. Even if your sibling uses every single cent to buy groceries for your parents or grandparents, the Finanzamt will throw your claim out. If your elderly relatives don't have a personal bank account in their name, help them open one immediately. The name on your transfer slip must match the name on their official paperwork. Now for the fun part, let's look at the cash return. When you deduct something from your taxes, it reduces your overall taxable income. If you earn a high salary as a senior developer or manager, you are likely sitting in the 42% top tax bracket, Spitzensteuersatz. That means for every 100 euros you successfully deduct, the government hands you back 42 euros in cash. Let's look at a clear example. Your family lives in a country categorized under Country Group 4, like India or the Philippines. Because the local cost of living there is lower than in Germany, the maximum German allowance is adjusted to 25% of the total cap. Let's see what happens when you support multiple generations starting in January. The multi-generational calculation breakdowns. Maximum base allowance per person, 12,348 euros. Country Group 4, adjusted cap, 25%, 3,087 euros maximum deduction per person. Your tax bracket, 42%. Scenario A, supporting two parents. If you support your mother and your father, you get 2 separate deduction slots. Total deduction equals 3,087 euros, times 2 equals 6,174 euros. Your cash tax refund equals 6,174 euros. Your cash tax refund equals 6,174 euros times 0.42 equals 2,593 euros and 8 cents. Scenario B, supporting two parents plus two grandparents. Yes, grandparents are legally recognized close relatives too. If you also send money to support your maternal or paternal grandparents directly to their personal accounts. Total deduction equals 3,087 euros times 4 people equals 12,348 euros. Your cash tax refund equals 12,348 euros. Your cash tax refund equals 12,348 euros times 0.42 equals 5,186 euros and 16 cents. To lock this in, follow these 3 simple steps. Make your first transfer in January to secure the full year allowance. Send the funds directly to your parents' or grandparents' personal bank accounts, never via siblings. Have them complete the standard bilingual family maintenance declaration, Unterhaltserklärung, and get it stamped by their local town authority. It takes a little bit of setup, but walking away with thousands of euros back in your pocket makes it the most profitable hour of paperwork you'll do all year. If this makes the complicated world of German taxes easy to understand, hit that subscribe button for Arch Time, give this video a thumbs up, and drop a comment below if you have any questions about the country groups. See you in the next video.